Let's talk about Ceat for a bit. The tyre maker aims to become India's #1 car tyre maker by the end of this decade. That's what the CEO of the company, Arnab Banerjee, told my colleague Tushar. Let's listen in.
We had a third one, which is calm tires, which is very low noise tires. So all three are basically covering the bases in the premium segment, which is 17-inch plus. The Z-rated tire is also a 21-inch tire, which is about driving on a highway or on empty stretches of road. Of course, the speed limit is about, the max is 120 kilometers per hour. But our job is to keep people safe, even if they marginally do better. It is safe at 200 plus. We don't recommend you to drive at 300. So this is something which is going to be a big need, customer need in the coming years. Run flat tire has been around, but none was manufactured in India. So we have invested in the technology and come up with this product. And this will again go into that same premium segment of 17-inch plus. The third one is calm, which is about very low noise tires, and as things are opening up, people are driving bigger cars on highways and EVs are coming up, the need for very low noise tire is going to be more salient. So this way we are covering the emerging customer need in 17-inch plus, which itself is a big trend going forward. So we want to be in a very strong position in this segment of premium tires.
So essentially you're prepping for the future.
Absolutely, and the present.
Okay. Can you tell me what is this particular segment, 17-inch plus tires, how large is this segment right now and where it can be in say 5 years time?
Yeah, so right now the saliency has already reached 8 to 10% in aftermarket. In OEM it's much higher. Okay. And it could reach anywhere between 25 to 30% in 3 to 5 years time. So this is how we define our premium segment as our premium customers are. So it's by the vehicle type and hence the tire rim size, which is 17-inch plus. Okay.
Again, let's talk about these tires again. What is the production capacity you're aiming for at the get-go?
See, our production capacity overall of passenger car tires is about 40,000 tires per day. We are investing further, and maybe by end of next fiscal, this will go to 46,000 tires per day. And then there is enough space in our Chennai facility to further invest. So we are committed to this segment not only for India, but we have a very big presence globally, especially in Europe. In US, we have just launched. In Latin America, we have decent presence. We have a significant market share in some of the countries of Europe, such as Italy. So we are committed to continuously invest in capacity as well as innovation and capability in technology. So you will see a lot of news from Ceat, small and big, over the next few months on innovative interventions in passenger car tires.
Okay. You talked about the investments that are going into it. Can you tell us how much investment has gone into developing these new tires? I mean, there's a lot of R&D that goes into first run flat tires in India, calm tires in India. So what has the investment been like towards these tires?
See, we invest between capital expense and operating expense. We invest anywhere between around 1.5 odd percent, sometimes 2% of our sales in R&D. It's very competitive. If you see the trend over last 5 years, it's been the highest investment in R&D as percentage of sales. Globally, of course, we have some gap to cover. We need to invest more to be, as we increase our aspiration globally, we would like to see this investment continue or enhance in terms of percentage of sales. So this is overall R&D I'm talking about, of which these new developments take a significant jump.
You're mentioning exports again, international business. What percentage of your overall business, of your overall revenue, does international business command now? And where would you want it, say, by the end of this decade, if you have a short-term, medium-term goal?
Here and now, I can say we are at about 19 to 20% of our saliency, and we have just acquired a brand called Camso in off-highway segment from Michelin. And with the integration of Michelin, I see this immediately moving to 25-26%. And by end of decade, we would definitely look at enhancing it to 30%. At least. Yeah.
Is it a way to offset domestic pains that you may be seeing on the margin front?
I would not look at it that way. I would look at it as an opportunity on many fronts. One is we get to understand the competing technologies and brands which are there globally. The tires we sell in Europe are totally different from what we do in India or in US for that matter. It will help, it is already helping us understand the emerging technology on sustainability front, consumer front, and different niche markets in different territories, which will help us in domestic market in the OEMs as well as in aftermarket. So it is, without this knowledge, we wouldn't have progressed as fast as we have progressed in the domestic market. So it is not only margin accretive, but it is also enabling to, in terms of technology and in terms of penetrating the OEMs. It is definitely enabling us in domestic market also.
You mentioned about margin accretive. Your EBITDA margin, correct me if I'm wrong, was 12.5% in Q3 of FY25?
Q3, it's 10%, 10.4.
10.4. How is Q4 looking like, and where do you want to end the year? Are there still margin pressures because of raw material cost? Because OEMs have raised their prices because of higher input costs. So I'm assuming that you're also facing those pressures.
Yes, yes. So the raw material basket is behaving in Q4 in the same manner. So it is flattish over Q3. Q1 also is flattish to the extent we have visibility. So the good news is that the raw material price is not going up. So that means the margins are stable even at a lower level. But we would like to take up prices in frequent bursts of very small amounts because the market is very competitive and there is a fight for share that is going on in several categories. But we would like to gradually in baby steps enhance the margins now that the raw material is flat towards the 40-41% gross margin level, at which level we are reasonably comfortable.
Okay, so 10.4 you said?
That was EBITDA.
EBITDA.
Gross margin, we are currently 35-36%.
And that's what you want to get to 40-41%?
So around 5% enhancement of gross margin is required.
So when is the next tire price hike coming to pass on these costs to the consumer?
It's difficult to fix a date, but we have taken some increases in two-wheeler category at the end of Q3, at the end of January. We will take further increases on the passenger side by end of March.
Okay. What about replacement demand and OEM demand? We have seen some slowdown in the auto space, at least in the first couple of months. The conversation with OEMs that we have had and through sources, we've seen that the picture is not looking too bright from the OEM point of view. How is, for you, how is the year looking for the entire 2025 and FY26? This will start in about 15 days.
So when you are talking of OEM demand, you are looking at a flattish four-wheeler, a negative commercial segment and a good two-wheeler segment, right? So overall, if I look at it, our OEM sales have been good because we had been talking about exiting some vehicles and coming back in higher rim sizes in passenger, in getting new approvals in motorcycle steel radials, in getting new approvals in truck bus radials. So those exits have happened over the last 2 years and the re-entries are happening now. So we are growing well in OEM. That's one. Replacement of the aftermarket scenario will be about mid-single digit growth for the market, I'm saying, for passenger. Two-wheeler will be strong single digit, almost double digit because of strong demand in rural. And truck bus radial should be around GDP levels, which is 6 to 7%.
This is maybe for Ceat you're talking about?
This is market.
Market. And
market.
For you?
We would always like to gain market share over this. So I can't predict what will happen in FY26, but this year we have been maintaining close to double-digit rate up to the first 3 quarters. So we would like to carry the momentum into Q4.
So where do you see you ending FY25?
FY25, as I said, we'll try to maintain the momentum of the first 3 quarters into Q4.
Okay.
Yeah.
You also mentioned before our chat that you're number 3 in the country right now. You want to be
passenger.
Number 1 in passenger vehicles. You want to be number 1. How far is that goal?
See, we have very strong competition in this segment and very entrenched players. It's if you look at our journey, we about 12-13 years back, we were at 2.5% market share.
Okay.
So we have climbed to 16. But as you know, the because of the competitiveness of the industry, climbing further is tough. We see this happening in a reasonably short period of time, and we have plans.
Short.
So it's difficult to predict. It could be 3 to 5 years.